Millennials really have been dealt a tough set of cards financially because planning for retirement isn't as easy as it was for your parents' generation, and buying a home isn't as easy for millennials today as it was for your parents' generation because homes are so expensive now, and the Federal Reserve Bank is not helping. What's up, everybody? I am Jaspreet Singh from theminorityMindset.com, where money minds rethink rich. Statistically speaking, if you are under the age of 45, it is harder for you to plan for retirement and budget for retirement. It's harder for you to afford a car, and it's harder for you to afford a home because the cost of living has grown way faster than your wages. Wages have gone up over the last 50 years. The problem is wages just haven't gone up as fast as our cost of living. And not just that, we also have a higher standard of living today, because 50 years ago, nobody had a cell phone in their hand, nobody had a MacBook, nobody had AirPods. And so now, not only do we have higher costs relative to our wages, we also have more costs. Couple that with the fact that the Federal Reserve Bank is really focused on today. They refuse to slow down their money printing, and they refuse to slow down their stock market bailouts every single month because they don't want to see a stock market slow down. They don't want to see a stock market tantrum, which is why they keep printing money and bailing out the markets every single month, which in turn comes back to kick millennials right in the, you know what, their extra guacamole. So let's talk about what's going on and what you can do with your money, that way you don't keep getting screwed over by the economy and the system. But before we get into that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our free Discord server called the Guac Talk community, because as we all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat with other minority mindset thinkers. You can chat about the stock market, the real estate market, the cryptocurrency market, and all things building wealth. This community is completely free, so if you want to chat with and network with other minority mindset thinkers, I'll put a link to how you can join our Discord server in the description below. There are two reasons why Americans are poorer, financially poorer today than they were 50 years ago. The first reason has to do with society, and we're talking about the cost of living growth relative to wages, and second are spending habits of people, especially in America. This is something that's out of your control as a person. These are your wage increases relative to your cost of living increases, relative to the standard of living increases. As you live through life, the prices of things are going to go up thanks to something called inflation. As the value of our dollars get diluted, the price of things go up. And as the price of things go up, now you have to go to the grocery store and pay more money to buy your groceries. This is what everybody talks about when we compare wages today relative to wages 50 years ago. Wages have gone up over the last 50 years, but wages have not gone up at the speed of our cost of living. Housing prices have gone up, the price to buy a car has gone up, the price of groceries have gone up, the price of going on vacation has gone up way faster than what people's wages have gone up by. This is out of your control, and this is one of the reasons why people are broker today, at least the average people are broker today than they were 50 years ago. On the flip side, we also have an extreme spending culture, which is fueling people's brokenness because you have easy access to debt and the easy ability to buy whatever you want. Right now, we have a spending culture where people want to show off their brand new Lululemon leggings. They want to show off their Gucci belt. They want to show off their Louis Vuitton purses. And now, how do you buy these things if you don't have $2,000 in your wallet to go out and buy that purse? Well, now you can just go out and put it on your credit card. And even if you don't do that and you're shopping online, you can use something like Affirm or Afterpay. You can buy it now and pay it later thanks to the help of all this brand new technology, which lets you have whatever you want today, and you can just pay it off in installments with a little bit of interest. Or a lot of bit of interest. This is something that we can control. What we do with our money, how we spend our money, and how we invest our money. I'll save this for a little bit later because this is going to be the cure of how you get out of this financial mess, but let's focus on this right now. The cost of living has really gone up over the last 50 years, and we've really seen it ramp up over the last 10 years. And so now, if you are a millennial, you're a young person, and you want to go out and buy a home, or even if you want to go out and rent a home, it's a lot more expensive now. That's why so many millennials are being priced out of the housing market just because they can't afford homes in this housing market. This leads me to the question, why are things getting so expensive right now? And to answer that, you really have to understand inflation, because inflation is when the value of your currency, the value of your dollars goes down. The easiest way to understand inflation is just to understand supply and demand. When there are more dollars in circulation, the value of each dollar that you have, the value of each dollar that you have in your bank account, the value of each dollar that you get in your paycheck, the value of each dollar goes down as more and more money is created and enters our economic system. And so when you hear about things like the United States government, the first thing you want to think of is the United States national debt. If you went out to the mall and you go shopping and you buy a whole bunch of nice and expensive things, and now you come home and then you see your credit card bill and oh my God, your credit card bill is $10,000 and you don't have $10,000 to pay off your credit card bill. Now you will have $10,000 worth of credit card debt, which you will now have to pay off over time. The way you pay off your credit card debt is now you're going to have to go to work every single day. You make money from your job, and then some of this money is going to have to go to pay off your credit card debt, and you're going to have to keep doing that until you pay off all your credit card debt plus interest. The United States government works kind of the same way. The United States government, when they spend money that they don't have, they have to borrow this money from somewhere else. They might borrow this money from other countries, or they're going to work with the Federal Reserve Bank, who prints this money, and then they give this money to the United States government. Then the United States government borrows this money from the Federal Reserve Bank, they spend it to help improve the economy or do whatever they want to do, and then the United States government has to pay this money back plus interest. But how does the United States government get this money to pay off all this national debt? Well, the United States government makes their money from people like you and me through taxes. So when you go to work every single day, a portion of your money is going straight to the government, the IRS, to pay taxes, and the government is going to use more and more of that money to pay off the national debt. But if we stick on the topic of inflation, anytime you hear that the United States wants to spend more money that they don't have, that means that there's going to have to be more money printed, because they're going to have to borrow this money from the Federal Reserve Bank, and the Federal Reserve Bank, although it's called the Federal Reserve Bank, is really not a bank, because you and I can't go there to deposit money or withdraw money. It's not a reserve because they're not sitting on any cash reserves, and they're not federal. It even says so on their website. So when the Federal Reserve Bank has to give money to the United States, they print this money essentially out of thin air, and then they give this money to the United States national debt goes up, and then the United States government will take this new money and they will inject it into our economy. In the short term, this is great because it boosts the economy. All this new money is added into the economy, but as this money starts to flow through the economic system, what happens is the value of our dollars get diluted, because as more and more dollars enter our economic system, the value of each dollar that we have, again, the value of each dollar in your bank account, the value of each dollar that you go to work every single day to earn, the value of each dollar starts to go down, which causes the price of things to go up. That's why when you go to the grocery store, it costs more money to buy groceries today than it did 10 years ago or 20 years ago. And that's why vacations get more expensive. And that's why housing costs keep going up, because the value of our dollars get diluted. Now, going back to the Federal Reserve Bank, the interesting thing about the Federal Reserve Bank is they are an entity that controls our monetary supply. They help monitor the money printing. They work with the Treasury Department to do that. And they also monitor interest rates, and they can change interest rates depending on what's going on in the economy. So the Federal Reserve Bank has a lot of control and a lot of power over our monetary supply. And so if you really want to understand what's going on with inflation, you really have to understand what the Federal Reserve Bank is doing. The first and most obvious thing is interest rates. When interest rates are low, more people are likely to go out and borrow money, which means more dollars are going to enter our economic system, which creates more inflation. Now, this is great news if you go out and you're borrowing a few $100,000 to go out and buy a hard asset like a house, because now you get to borrow money very cheap. But it also creates more inflation on the back end, because more dollars will enter our economic system. The second thing you have to understand is the money printing by the Federal Reserve Bank, because right now the Federal Reserve Bank is printing something around $120 billion every single month, and they're injecting this money into our markets to buy bonds to help keep our stock market and our financial markets afloat. See, the Federal Reserve Bank is very worried that if they stop this money printing and they stop these bond buybacks, that investors will get scared and then they will sell their stocks, and they will be less likely to invest their money into the financial markets. If that happens, then we could see stock prices go down, we could see asset prices go down, and that's not good news for investors. And so to prevent that from happening, the Federal Reserve Bank is continuing to print this money, and they're doing this every single month, and they're injecting this money into the asset markets and the bond markets to keep investors confident and to keep people investing their money in the market. We saw almost the exact same thing happen back during the 2008 crash, because we saw the same thing. We saw a financial meltdown, so the Federal Reserve Bank was printing money every single month to buy up assets, to keep investors confident and to keep them investing their money in the market. But then one day, the Federal Reserve Bank decided that our economy was growing and they don't need to do that anymore, so they stopped the money printer and they stopped putting money into the markets. And as soon as that happened, we saw a small stock market crash. This was back in 2013, and it was called the taper tantrum. And so now the Federal Reserve Bank is trying to learn from their mistakes, and they don't want that to happen again. They don't want the stock market to crash. So every single month, they keep injecting their money into the market to keep bailing it out, because they don't want to see the stock market slow down. And in exchange, you are going to be the one paying the price through inflation unless you're financially educated. Remember, inflation is what causes the price of things to go up. And what we've seen happen decade over decade over decade is that the price of things, our cost of living, is growing faster than wages. So yeah, we're seeing the price of wages go up, which is great, but we're not seeing wages grow as fast as the cost of living, which is not so good news. And so as we see more inflation, the people that pay the price for that literally are the majority of people who are not financially educated. That's why inflation is known as a silent tax, because it hurts the people who don't understand it. This is the issue that we're facing right now. The Federal Reserve Bank knows that we're seeing higher inflation. The Federal Reserve Bank knows that it's harder for people to go out and afford groceries. The Federal Reserve Bank knows that it's more expensive for people to afford their housing costs. The Federal Reserve Bank knows that inflation is hurting people who are not financially educated. But in order to avoid a stock market slowdown, they will continue to keep printing this money and bailing out investors. This is why financial education is so important, because now who's going to be the people paying the price? It's the younger people, Millennials, Generation Zers, who are not financially educated, because inflation hurts the people who are not financially educated. So this is what's going on right now. We have monetary policies out there which are continuing to ramp up inflation because the people who are in charge don't want to see these asset prices slow down. And in return, the people who are going to be paying the price are the people who are not financially educated. This brings me to the second side of things. What should you be doing with your money right now? That way you can protect your wallet and build your wealth in this crazy economic system. Well, let me start by mentioning this. If you are interested in learning more about financial education and how to manage your money and how to invest your money to build wealth, our team has put together an amazing guide on money management and investing that will walk you through the financial education you need. That way you can use your money as a tool to build your wealth. This guide is completely free when you sign up for a daily newsletter. So if you want to get this guide, that way you can start bumping up your financial education so you can use your money to build wealth. I'll put the link to how you can download this guide for free in the description below. What you want to be doing now, that way you can benefit from this whole economic system, is you need to own assets which grow when you see more inflation. The reality for so many people is right now, if you get $1,000 in your wallet, what do people do? You're gonna go out to the store, you're gonna give it to Gucci, you're gonna give it to Apple, you're gonna give it to Amazon, you're gonna give it to Lululemon, and then you're gonna give yourself nothing. What I want you to do from now on is, for a little while, you gotta stop giving everybody else all your money, because you're making all of them rich. You're making Apple, Amazon, Gucci, Lululemon rich, but you're keeping yourself broke. So what I need you to do is I want you to take this money, put it back in your pocket, and then use this money to buy something that's gonna make you rich. The thing that wealthy people do with their money is, when they make money, before they go out and spend it on all these nice things, is they spend it on assets. They buy things that will make them money first, and then when their assets make them money, that's the money that they go out and spend at Gucci, Lululemon, Amazon, and Apple. Now, unlike what a lot of financial experts say, I'm not saying that you need to sacrifice all of life's luxuries. I'm not saying you shouldn't own any designer clothes. I'm not saying you shouldn't drive a luxury car. I'm not saying you shouldn't go on fancy vacations. I want you to have all that nice stuff. I want you to live your dream life. I just want you to be able to afford it first, because right now, the first thing you got to do is you need to get a hold of some of these assets that are going to put money in your pocket. Because if you don't have any assets, you're going to be the person paying the price with the higher inflation. Because what happens when we see inflation is you're going to have to pay more money to the store. So what I want you to do is I want you to own a piece of the store. That way when the store makes more money, so do you. That means taking some of your extra cash right now and using it to buy stocks, using it to buy real estate, rental properties, using it to buy businesses. That way you own these assets which are working hard to earn you more money. Because at the end of the day, you can never become wealthy off of your salary alone. Because as soon as you stop working, your salary is going to stop coming in. So what you need to do is you got to go to work every single day. You're going to get this paycheck. Now, you want to take some of this paycheck and start buying more assets. You want to buy as many assets as you can. That way these assets can start paying you. Where you go with that now is going to depend on your goals. Maybe you want cash flow. I love investing in real estate because real estate gives me cash flow. When I buy a rental property, I know this property is going to pay me every single month as long as I have tenants in there and as long as I own the property. Some people like to own stocks because you have the opportunity to see a lot of appreciation. You can buy a stock for $100 a share, and if you own a great company that's innovating for the future, you can see the stock price go up to $200 a share. Other people want to take their money and they want to buy their own businesses. They want to manage their own businesses. They want to be really involved. So you got to figure out what your goal is and how involved you want to be with your investments. The thing that's the most important here is you have to understand the difference between being a producer and being a consumer. Because if you are just a consumer, meaning anytime you get paid, you're just going out and you're spending that money, you're paying your rent, you're paying your mortgage, you're going to the mall, you're buying all these nice things, you're going on vacation, and then you have no money for yourself to buy these assets, You're just a consumer. You're the person that's making everybody else around you rich. You need to build that producer mindset where now you want to own a piece of the assets. If you go out and you buy shares on the stock market of Amazon or Lululemon or Apple, you become one of the owners of these companies. When they make more money, so do you. When you go out and you buy rental properties, you own a piece of real estate. Now you own an asset that's going to be producing you cash flow. And if real estate prices go up, now the value of your real estate went up. If you own a business and now you see more inflation and the price of things are going up, well, now you can charge more money for your business. The unfortunate thing is this is something that we're not taught in school. We're never taught how to manage our money. We're never taught how to protect our money against inflation. We're never taught how to build wealth. We're never taught how to own assets. We're never taught how to create cash flow that we can live off of your investments instead of just living to work every single day at your job. These are things that you have to go out of your way to learn. This is what financial education is all about. We have a ton of resources on our YouTube channel. You can check out our website, theminoritymindset.com. And if you haven't already, you can check out our ebook or free guide in the description below. Thank you for watching. If you enjoyed this video, here's a video on things you should not do when you get paid that I think you'll love. And while you're at it, download our free guide on how to manage your money and build wealth. And as always, keep hustling. One of the most effective ways to invest this money into the stock market is to create an automatic passive investment. But now, instead of creating a separate checking account for this,